Hello and welcome back. Francois, hello.
Hello, Mark.
Thank you for joining us. Can you just explain to us what is happening with tariffs and how you see it, whether this is short term, whether this will be cleared up quite quickly?
Okay, first of all, I think that it just announced some of its tariff policy. As you mentioned, the European Union is not concerned by the tariffs that were announced over the weekend and at the end of last week. It's mainly China plus Canada and Mexico. AU is a big, there is a big threat from Trump concerning AU. He says that he is going to act on them, but we don't know to which extent and when he's going to act on them. The big issue that you have is that when you look at January, January was a month where you had erratic movements on the markets on different fronts, be it on gold, on equities, or anything. But people had in their mind, because we had some declaration by some of the member of the administration, of the Trump administration, that maybe they would go with a step-by-step system when it gets to trade tariffs, and that they would go by 2.5% each month and etc. in terms of the way they want to implement it. The measures that were announced over the weekend are not responding to this kind of expectation. It's really going for the hammer. And when you get a 25% tariff on 30%, you need to imagine that 30% of the goods that the US consume comes from Mexico and Canada. This is not something that is small in size. So now the people realize that there is a fear that you could get into a trade war, which is never good for the economic activity, which potentially can be negative for inflation. This is the reason why Trump says it could have some short-term negative impact. But now we are in this process where we need to assess to which extent this trade war is going to be a lasting one, to which extent it's going to be extended to European Union, which is 20% of the exports from the European Union are going to the US. So imagine what it means if you get to the point where you have tariffs coming for the European Union, you have retaliation coming from Europe. So it means that you are in a different world. So this is the reason why people are so frightened by what happened over the weekend in the US.
Let's come to markets now. It's fair to say that the markets are not loving this at all. They've reacted quite badly. I'm not sure what they expected really because we had been warned about this. Let's talk about the dollar first of all. The dollar is up 2% against the euro. It's also up against the Mexican peso and the Canadian dollar, amongst other various currencies. How are we going to read this move in the dollar? And is it sustainable?
I don't, to answer your last question, I don't think that it's sustainable. I think that, for the time being, people were in a way, and you mentioned that people were expecting, we knew that we were going for some tariff measures, but in January, people were expecting that it would be really a gradual process. Suddenly come the shock. It's not a gradual process. It's a strong implementation of tariff. And this is the reason why people are in a way so spooked by what happened. The first reaction is to bring the US dollar higher, and we can go to parity against the euro in the very short term. Why? Because we all know that the economic activity in the US is much stronger than in the rest of the world. So people are buying the fact that the measures that were adopted by the US are going to impact the Chinese economy. They are going to impact the rate of growth in Canada, in Mexico, and potentially if there is tariff against European products, it could impact the activity in Europe, which is already quite small and below the level that you would like to see. I think that in the medium term, people will realize that the trade war is going to be negative for the US also, and that the decision by Trump, if it's a lasting one, if it's not a negotiating strategy, if it's going to be in place for many quarters, it's going to reduce quite significantly the economic activity in the US. And I think that by then, the risk that you have in the US is that you have a kind of stagflation that is going to happen in the US economy, i.e., a strong deceleration in economic activity, and you will have higher inflation in the US economy. So the dollar is not going to support it by these measures, to my point of view, in the medium term.
You mentioned inflationary aspects of tariffs. So let's go to treasuries. The reaction in the 10 year has been quite mooted so far. Why is that?
It's exactly what I told you. The 10 years is in fact, in a way, what they are anticipating is the fact that the policy that was adopted by Donald Trump is going to weigh on economic activity in the US. This is the first measures that you have on the 10-year. They are telling you, the 10-year market is telling you, okay, it's going to affect negatively economic activity in the US. The big question, and nobody is able to answer really this question, is which kind of inflationary impact can have those measures in the medium term for the US economy? So that's the reason why I still believe that the 10-year bond in the US is quote unquote a dangerous asset in the short term, because I think that it doesn't price the risk of inflationary impact of the tariff on the US economy in the medium term.
So you think short term, there is going to be a reaction on the yield curve, and therefore short term rates are going to take the hit, not long term rates so much. But you see in the long term that being reversed.
Exactly. I think that at the end of the day, you could have a move. You could have a move. The short-term part of the curve has not reacted very well. You had a tension on the 2 years because we know that potentially this is something that is not very good. The long part does not react. What you could see in the medium term is you see a move upward of the curve and a steepening of the curve, and the 10-year bond in the US going back to 475, 480 in the coming months.
Let's come to commodities now, especially petrol and natural gas. I noticed natural gas is up 7.5% this weekend. Petrol is up 2%. Why is that happening?
Because the problem is that everybody knows that the US is today the first producer of oil around the world. It's more than 12, 13 million barrels per day. So it's huge amount of oil that is produced by the US. But nevertheless, the US is consuming much more barrels than they are producing. So it means that they need to import a lot of their energy to support their economic activity and to support their consumption. So that's the reason why it's going up. And also, people need to be aware that oil coming from Canada is significant, and that's the reason why Trump decided to impose a tariff of 10% and not 25% on oil coming from Canada. And the fact that natural gas is going up is because people are asking themselves, if you are putting tariffs on such a good that is a necessity to support your consumption and your industrial activity, you need to find an asset that is in the US, i.e., natural gas. So there will be more demand for natural gas, etc., and etc. It is a bet. I don't know if it is going to be lasting, but that, nevertheless, this is the explanation I can see. You need to find a substitute for oil, and that's the reason why natural gas is benefiting.
Coming to stocks now, the reaction in stocks has been quite immediate. In Asia or even pre-market this morning in Europe, I think the Dow is down. Dow is down 1.5% in terms of the future. How do you see stocks reacting to this? Is this the end of the bull run for a few weeks?
I think that you have different factors that are in the system that you could see in January already. The issue of inflation is in the system. The numbers for inflation were quite good, and the market was relieved. You had a significant tension on bond yield at one point. I remember the first 2 weeks of January. Look at where the market was, because there is a lot of uncertainty about where the 10-year bond yield will go in the coming months. So I think that this is another element that is in the market and that makes this run on the equity market to a certain extent dangerous. And then you had tariff. In January, really, what the people wanted to hear was the fact that tariff would be put in place, if put in place, very gradually. Then come this shock. Tariff and trade war is only one of the factors that is going to impact the market in the coming months. I think that you need to keep in mind the at least four factors in order to answer your question. First of all, the earnings. Earnings season is underway. Some of the numbers are very good, some were not necessarily particularly good. So earnings need to deliver to support the bull run. Second, you need to see inflation to be under control. Have we reached this point? I'm not sure. There is still a lot of uncertainty. It means that you have uncertainties on long-term bonds yield, and you still need to be careful with long bond yields. And now you have tariff. What I say is that the tariff and the decision of Donald Trump is one more factor to be cautious on the equity market. It justifies the scenario that there will be more volatility in the very short term on the equity market around the world. Does it mean that the market cannot go over it and overcome this situation? I would not say that. I still think that the equity market has the ability to finish the year higher than it is today, and that you have some upward potential. But there is, in the very short term, the risk that you are going to see some consolidation on the market.
In terms of sectors, which sectors would be particularly hit, and which sectors would be able to absorb these kind of tariffs in terms of their margin, for instance?
Okay, I think that the sectors that you can consider which is at risk is really the automobile sectors. The automobile sector, because there is a lot of things coming. We all know that a lot of cars are coming from Canada, from Mexico, and that it's something I would be careful with such sectors. I think that if we have an extension of the tariff to the European Union, we need to be careful with luxury goods because they are also the one that could suffer. It's a big part of the sectors of the index in Europe. So be careful with the luxury good. Which one would be the main beneficiary? The one which are more connected to the domestic activity and less to exports. So you need to do your job. I think that the financial could be the beneficiary also to continue to benefit from these developments. Service sector are less subject than good sectors to the influence of tariff. So you need to consider those sectors as potential beneficiaries.
Coming to gold now, is there or what would be the effect on gold from sustainable long-term tariffs?
No, I still defend the same idea, and I am very positive on gold. I still believe that at the end of the day, in a world where you have less negotiation and you have more confrontation, you want to find assets that are safe haven values. And I think that gold remains a safe haven value. I know that this morning, after reaching a new record by the end of last week, the gold price was a little bit down. I think it's connected to the fact that the dollar was very strong and that there was a strong upward pressure on the US dollar. But at the end of the day, what is interesting is to notice that over the last 18 months, the correlation between the price of dollar and gold has, in a way, diminished quite significantly. So to me, gold is still up for a run to 3,000 in 2025. And I still reckon that you need to keep your gold in your portfolio.
Francois, thank you for joining us. Speak to you next Monday.
Bye bye. Have a good day.
You too. Bye bye.